But on to more global voices as well. Hans Goetti, CIO for Asia at Finaport, joins us from Singapore to speak about his views. Hans, you've spoken about how the accommodative stance would continue to benefit EM equities. Could we expect fresh highs from Indian market and beyond?
Well, first of all, we are bullish for emerging markets for one reason, and that is continued monetary accommodation by the Fed, by the ECB, the Bank of Japan probably. All the major central banks are, in fact, embarking on QE in possibly unlimited amounts. And, of course, that will benefit emerging markets as capital is directed into areas with higher growth. So India will be a beneficiary. We've seen India actually doing well in relation to emerging markets, and we think that will continue in 2013.
You like high dividend stocks in Asia. Does that mean that ITC, HUL, DAB will continue to be your conviction bias?
Well, we like high dividend yield stocks anywhere in the world because we're living in a world of zero interest rates. People are in need of income. It's very difficult if you have money in a bank. You get nothing on it, so you have to take some risks to get higher income. And if you want income, you buy equities. If you want capital gains, you buy bonds, but that's a different story. But yes, we are looking at companies that have a sustainability of dividends, the payout ratio low if possible, and I think the capacity to increase dividends.
What do you expect from India as a market, which has outperformed other BRIC nations in 2012? I mean, how do you think it will happen? It will work in 2013?
We continue to favor India simply because we are not very far along in the monetary easing cycle. We think that there's room for interest rates in India to go down. That's not the case everywhere. And a lot of bad news is actually built into the prices already, and valuations are relatively reasonable by historical standards. So we think India will continue to outperform.
What segments interest you in India then? Where is it that you find value right now?
When you're talking about sectors, what you want to see in India is a resumption of the investment cycle. I think that's the key to the whole economy. And as of late, we have seen infrastructure stocks doing actually very well, and we expect that to continue because at some point you will see some more infrastructure spending again. It depends a bit on the political environment there as well, of course. Furthermore, we still like the banks. In a period of falling interest rates, banks should do okay, especially the private sector banks. And anything that is connected with rural consumption, we actually favor as well.
What is your 2013 outlook? How do you think Asian markets as a whole would perform?
Well, given the continued aggressive expansion of the balance sheet by the major central banks, we think that Asia will do relatively well in relation to the rest of the world. We're looking for a lower dollar, which always benefits Asian markets, and probably more of a risk on than a risk off trade, at least in the next, probably the first quarter of 2013.
All right, leave it at that. And thanks so much for taking the time out and joining us.